Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock. With news, we're ending the year with some very mixed signals, and it isn't clear one way or the other whether the widely expected recession will actually eventuate in 2023. Markets are no longer in fear mode. However, in China, the pressure on property developers is never ending. Now, to bail them out, Beijing has ordered its top 4 state-owned banks to issue offshore loans to help developers repay overseas debt. In Japan, births amongst Japanese nationals total 798,000 according to the official data for 2022, down from 811,000 the prior year. This is the first time the 12-month figure has dipped below 800,000 births. That is far below replacement levels, and the Japanese population is shrinking fast now. In Europe, producer prices are now falling, and quite quickly, after a heady, uncontrolled run-up induced by Russia's invasion of Ukraine. They fell 2.5% in October from September, or falling at an annualised rate of 30%, but they're still 31% higher than year-ago levels. In the US, their labour market has outperformed analyst expectations with a headline seasonally adjusted rise of 262,000 non-farm payroll jobs in November, when a 200,000 level was expected. The labour market expansion hasn't stalled there yet. But as you may recall, we also look at the raw unadjusted data, and that shows payrolls actually rose 574,000 to 155 million, and a new record high. That is 4.8 million more employed than a year ago, and almost 2 million more employed than peak pre-pandemic. That is a lot of extra payroll cascading through the giant American economy. It's no wonder that some analysts think a softer landing is possible. That is not to say it's all roses. It isn't. The Fed's Beige Book surveys show that businesses expressed greater uncertainty and increased pessimism for the American economy as prices and interest rates continue to rise. And Canada's labour market also turned in a better than expected result in November too. In Australia, it's becoming increasingly clear that sharply higher prices for coal and natural gas, thanks to Russia's Ukraine invasion fallout, and continuing good iron ore prices are delivering a substantial windfall tax take for the Australian states and their federal government. They have a direct financial interest in raising carbon-emitting outputs. Meanwhile, global food prices eased slightly in November, continuing a downward trend since the peak in March. Prices for both meat and dairy contributed to the easing. And the US Treasury 10-year yield starts today at 3.49% and down 4 basis points. And the price of gold will open today at $1,797 an ounce. And oil prices start to down $1 at just on $80 a barrel in the US, while the international Brent price is down to just over $86 a barrel. And the Kiwi dollar will open today at 64.1 US cents, and its highest since August. Against the Australian dollar, we're firmer at 94.4 Australian cents and an 11-month high. Against the euro, we're also firm at 60.9 euro cents and a 2-month high. That all means our trade-weighted index starts today at 72.4 and a 3-month high. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90.